Why sound corporate governance practices are needed and their importance to Islamic financial institutions? It is because sound corporate governance norms and practices ensure that Islamic banks are managed properly and soundly, with risk-taking activities and business prudence correctly balanced to maximize shareholder profit and protect all shareholders' interests. Strong corporate governance become vital defense against all types of mismanagement and prudence activities in a liberal and more competitive environment where management is always pressured to provide desired bottom-line results. Effective corporate governance procedures that improve company accountability are essential for market discipline and transparency to function. Principle 1. Every Islamic bank should be aided by an effective board which assumes specific responsibility. The vision, strategy, and corporate values of the Islamic bank should be clearly specific and understood. The board play a critical role in ensuring sound and prudent policy and practices of its Islamic bank. The board needs to perform its oversight role effectively and understand its overall responsibility to stakeholders. While the board is not involved in the day-to-day operation of the institution, it provides effective check and balance mechanism in the overall management of the Islamic bank. The board carries ultimate responsibility for the proper stewardship of its Islamic bank. It has the responsibility in ensuring the maximization of shareholder value and safeguarding the stakeholder interest. This could be done through rigorous and diligent oversight over the Islamic bank affairs, establishing, among others, Sharia compliance, the corporate values, mission, and strategy that will direct the activities of the Islamic bank, and to be aware of the type of material financial activities the Islamic bank intends to pursue. The board has fiduciary responsibility to act in the best interest of Islamic bank and to protect it from inappropriate action or influence of dominant or controlling shareholders that are detrimental or not to the best interest of the Islamic bank and its other shareholders and stakeholders.
Principle number 2, there should be an effective board composition with a strong independent element where no individual or small group or individuals should be allowed to dominate the board's decision making.
Is an important factor in determining the effectiveness of the board in providing direction and guideline to the management of the Islamic bank. The board should determine the appropriate size of the board, and in determining the size considerations should be given an effective conduct of board deliberation. The presence of suitable qualified independent directors can help to provide the necessary check and balance in ensuring the Islamic bank operates in a safe and sound manner. The board should comprise of directors who as a group provide a mix of core competence such as finance, accounting, legal, business management, information technology, and investment management. Thus, a higher proportion of non-executive directors could mitigate any possible conflict of interest between the policy-making process and the day-to-day management of the Islamic bank. Principle 3. There should be a clear division of responsibilities at the helm of an Islamic bank which will ensure a balanced and clear line of role, responsibility, authority, and accountability throughout the Islamic bank. There should be a clear division of responsibility at the helm of an Islamic bank to ensure a balance of power and authority, such as no one individual or group of individuals dominate the decision-making process. There should also be a properly documented and well-communicated reporting structure in the organization that clearly shows line of reporting responsibility and authority so that each employee fully understands its job function and as accountability and integrity of operation in the Islamic bank will be preserved. Unspecific line of accountability or confusing multiple lines of responsibility may worsen a problem through slow or diluted responses. Principle 4. There should be a formal and transparent process for the appointment of director to the board and the appointment of chief executive officer. Policy requirement: the appointment of director and CEO of an Islamic bank require prior written consent of Bank Negara Malaysia. Appointment of chairman Islamic bank are required to obtain Bank Negara Malaysia approval for the appointment of chairman of the board. Chief executive officer: the sound operation of an Islamic bank depends critically on its CEO. Thus, it must be able to devote its full attention and time to be able to discharge the duty and responsibility effectively and diligently. Bank Negara Malaysia hold the CEO directly responsible for the day-to-day operation of the Islamic Bank. He must be familiar with the operation of the Islamic Bank, the state of internal control, requirement of regulation, as well as current issues and policy affecting the industry in general. It must also have the necessary knowledge and professional competence in the conduct of the Islamic Bank business. In the absence of CEO, an Islamic bank is required to inform Bank Negara Malaysia of the person who will be directly responsible for the overall running of the Islamic Bank. This is necessary for Bank Negara Malaysia to consult him on matters of policy and day-to-day operation. The acting person should be fully acquainted with the Islamic Bank affair and should be able to act promptly and with authority on matters affecting the Islamic Bank. Appointment procedure. A document and transparent procedure for the appointment of CEO and director to the board is important to protect the integrity of the board. The policy and procedure for appointment should be approved by the board. The nominating committee of the Islamic Bank should make recommendation to the board and all board appointment and reappointment.
Principle 5. Directors must be persons of caliber, credibility, and integrity with the necessary skills and experience and be able to devote time and commitment. Directors provide leadership on matters of strategic importance to the future direction of an Islamic bank. They are also expected to bring sound judgment to bear on difficult issues. As the expectations on directors are high, they must be competent, experienced, and knowledgeable and have sound judgment to exercise their responsibilities that include being able to question and provide advice to management. They need to have sound understanding of their Islamic bank's business, the nature of risks undertaken by the Islamic bank and its strategic direction. In addition, the board should have sufficient knowledge and understanding on the nature of mudarabah and musyarakah financing of investments and the risks associated with this type of transactions. Principle C. Board should meet regularly and be duly furnished with complete and timely information. The board is collectively responsible for the overall control and performance of an Islamic bank, and by meeting frequently enough, the board will receive sufficient information for the management to monitor the financing condition and enable the board to deliberate and discuss important strategic issues. Circular resolution cannot be a perfect substitute for board meetings since they do not offer the opportunity for board members to actively debate over the issues circulated and to raise immediate questions or resolutions which may lead to inappropriate decisions being made. For frequency of meetings and attendance, meetings should not be held sufficiently frequent to ensure that first, the board is keeping sufficiently in touch with the business of the Islamic bank. Second, the operation of the Islamic bank are not adversely affected because of the difficulty in securing board's approval for policy and decision. For minutes of meetings, Islamic banks shall keep full minutes of all board meetings. The chairman should ensure that all directors are briefed on issues arising at board meetings. The minutes should record the decisions and their rationales. If it is of utmost importance that any concerns or dissenting view raised by any directors, including independent directors, are discussed and minute. The minutes should also facilitate the performance evaluation of the board and individual directors. For company secretary, the role of the company secretary should be clearly defined and should include a responsibility for ensuring that board policies are followed and applicable rules and regulations are complete with. The company secretary should attend all board meetings and should maintain an accurate and indicate records of any action deliberated during board meetings. Principle 7. There should be a formal and ongoing assessment of the effectiveness of the boards as a whole, the directors and the chief executive officer. For board performance, there should be a procedure for a regular assessment of the board as well as the performance of each individual director and the CEO to ensure their effectiveness. Therefore, the board should implement a process through the nominating committee and for annual assessments of the effectiveness of the board as a whole and its various board committee, as well as the contribution of each individual director and the CEO based on objective performance criteria in line with the established KPIs. For evaluation of the board, inherent in the board evaluation is need to have a prescribed objective and defined rule against which the performance of the board can be measured. Islamic Bank should formulate key results indicators which can be derived from the strategic plans and objectives and use it to measure the board's performance. For evaluation of individual directors, a director should be both assessed against the defined role and functions of the board and relatively against the perceived performance of the director's peers. As part of the improvement process and in addition to formal evaluation process, continuous feedback of an informal nature should be carried out. The chairman should have the opportunities to speak privately and frankly with each director about his contribution and performance on an ongoing basis. For evaluation of CEO, the board should establish criteria to evaluate and assess the performance of the CEO of an Islamic bank. The criteria established in assessing the performance of the CEO may include, amongst others, and financial and business performance of the Islamic bank and the accomplishment of long-term strategy, capacity building, and business plan. Principle 8. There should be a formal and transparent procedure for fixing and remuneration package of the board members, chief executive officer, and senior management, and the remuneration policies and practice should be in line with the Islamic bank's ethical values, objectives, and culture. The policy on the remuneration of directors, CEO, and senior management should be developed under conditions of objectivity and transparency. The levels of remuneration should be sufficient to attract and retain directors of caliber, but at the same time should be also balanced against the need to ensure that Islamic bank's funds are not used to subsidize excessive remuneration package and not compromising the ongoing viability, solvency, and reputation of the Islamic bank. Remuneration committees should be responsible for developing a clear policy and framework on the remuneration of directors, CEO, and senior management. Instead of remuneration package, the committee should consider the following. First, ensure that the remuneration policy supports the Islamic bank's objective, culture, and strategy. Remuneration and employment condition of the industry too. And the third, the Islamic bank relative performance. And fourth, the performance-related elements of remuneration should form a significant proportion of the total remuneration package of executive directors. However, salary scales should be within the scope of the general business policy and not be solely based on the short-term performance to avoid incentive for excessive risk-taking. Next, the remuneration of non-executive directors should be appropriate to the level of contribution, taking into account factors such as efforts and time spent and responsibility of the directors. In addition, the remuneration of each board member may differ based on their level of expertise, knowledge, and experience. And lastly, to cover all aspects of remuneration including directors' fees, salary, allowance, bonus, options, and benefits in kind, and termination benefits. Principle 9. Person in power, the decision-making authority, including directors, should exercise care to avoid situations that may give rise to a conflict of interest situation. The directors, officers, and employees of an Islamic bank must conduct their business with the highest level of ethical value. Conflict of interest situation called into question the ability of the person involved in the conflict to act objectively in the best interest of the Islamic bank. For Section 28 of the IBA subject Islamic bank directors to disclose the requirement in respect of their other business interests, such as disclosure shall be duly recorded in the minutes of the board meetings at which the disclosure was made or at which it was brought out and read. Directors shall not be at the board meeting where the material transaction or material arrangement is being deliberated by the board of directors. The board should establish procedure to address a conflict of interest situation and should ensure that senior management implements policy to identify, prevent, or appropriately manage and disclose potential conflicts of interest situations that may arise. Such policies should ensure that the Islamic bank's activities may give rise to conflict of interest are carried out with the sufficient degree of independence from Taka department each other. This could be done by, for example, ensuring appropriate segregation of duties so that employees are not assigned potentially conflicting responsibility, providing for separate reporting lines and internal controls. Also, establish information barriers between different activities.
Principle 10. There should be clear separation between shareholders and management so as not to impede sound corporate governance. Shareholders should not be involved in the running of Islamic Bank. They should hold the board accountable in overseeing the management of the Islamic Bank, and the Kaful department rely on management to run the day-to-day operations of the institution. There should be a clear separation between the controlling shareholders and the management function, such that these shareholders should not hold any senior management position in the Islamic Bank. The CEO should derive power and authority only from the board. As such, the CEO and senior management should operate within the mandate given by the board and should not take directive from any other person other than the board. This is to protect Islamic Bank from inappropriate actions or influence of dominant or controlling shareholders or any other person. Principle 11. There should be a robust auditing requirements, and the auditor board and the management need to maintain professional and objective relationship. The role of independent, competent and qualified auditors is vital to the corporate governance process. This includes identifying problems with the Islamic Bank risk management and internal control system, and ensuring that the Islamic Bank financial statement fairly could represent the financial position and performance of the Islamic Bank in all material aspects. Internal and external auditors are important agents for the board, and their work could be utilized as independent checks on the information received from management on the operation and performance of the Islamic Bank. The effectiveness of the board and senior management can be enhanced by recognizing the importance of the audit process and communicating such an importance throughout the Islamic Bank, taking measures that enhance the independence and stature of auditors, ensuring that auditors understand their duty to the Islamic Bank and its stakeholders to exercise due professional care in the conduct of audits, and utilizing in a timely and effective manner the findings of auditor, and lastly requiring timely correction by management of problem identified by auditors. Audit committee. The board is required to establish an audit committee to provide independent oversight of the Islamic Bank internal and external audit function, internal control and ensuring check and balance within the Islamic Bank. Internal audit. The internal audit function is an important part of any effective internal control and risk management system because it provides an independent assessment of adequacy of and compliance with established policies and procedures. In addition, internal auditors should review and evaluate the reliability, adequacy, and effectiveness of the Islamic Bank internal control. The scope of internal audit should be cover financial management and Sharia audit. The nature of the internal audit role makes it critical that internal audit personnel is independent from day-to-day activities of the Islamic Bank and have unrestricted access to all activities conducted by the Islamic Bank. Direct accountability to the board facilitate the proper functioning of corporate governance by enabling the internal auditor to provide the board with information that is not biased as the result of interference by line or senior management. The importance of the internal audit function to the corporate governance process also required it to be adequately resources and staffed with competent and well-trained officers. The role of independent, competent and qualified auditors is vital to the corporate governance process. This includes identifying problems with the Islamic Bank risk management and internal control system, and ensuring that the Islamic Bank financial statement fairly could represent the financial position and performance of the Islamic Bank in all material aspects. Internal and external auditors are important agents for the board, and their work could be utilized as independent checks on the information received from management on the operation and performance of the Islamic Bank. The effectiveness of the board and senior management can be enhanced by recognizing the importance of the audit process and communicating such an importance throughout the Islamic Bank, taking measures that enhance the independence and stature of auditors, ensuring that auditors understand their duty to the Islamic Bank and its stakeholders to exercise due professional care in the conduct of audits, and utilizing in a timely and effective manner the findings of auditor, and lastly requiring timely correction by management of problem identified by auditors. Audit Committee. The board is required to establish an audit committee to provide independent oversight of the Islamic Bank internal and external audit function, internal control, and ensuring check and balance within the Islamic Bank. Internal audit. The internal audit function is an important part of any effective internal control and risk management system because it provides an independent assessment of adequacy of and compliance with established policies and procedures. The board should ensure that it receives the management letter from the external auditor with undue delay. Detailed consideration to the management letter may be delegated to audit committee. Appropriate action should be taken to deal with control on or other weakness identified in the management letter. Principle 12. Islamic Bank should engage in regular, effective, and fair communication with shareholders or stakeholders. The board must maintain an effective communication policy that enables both the board and management to communicate effectively with its shareholders and the stakeholders and the public at the Truth Disclosure or AGM. The AGM is a crucial mechanism in shareholder communication as it gives direct public access to the board. Islamic Bank should encourage greater shareholder participation at AGM and allow shareholders the opportunity to communicate their views on various matters relating to the Islamic Bank. The chairperson of board committees should be present and available to address questions at general meetings. The external auditors should be present to assist directors in addressing any relevant query by shareholders. Islamic Bank should regularly convey pertinent information, gather views or inputs, and address shareholder concerns. In disclosing information, Islamic Bank should be as descriptive, detailed, and forthcoming as possible. Islamic Bank should disclose information on a timely basis. Principle 13. Conducting corporate governance in a transparent manner can reinforce sound corporate governance. Comprehensive disclosure requirement. To facilitate market discipline and sound corporate governance, appropriate disclosure is required so that shareholders, other stakeholders, and market participants can effectively have an understanding of the financial and management position of the Islamic Bank, particularly in relation to its safety and soundness. Islamic banks are required to observe the guideline of financial reporting for licensed Islamic bank, BMS/GPAI, on the comprehensive disclosure requirement by Bank Negara Malaysia. Components of the corporate governance disclosure shall at minimum comprise the following. First, board as whole. The composition of the board, including the name, designation, and the independence of directors. Roles and responsibility of the board. The frequency and conduct of board meetings. The attendance of each director at board meeting. Key information and background of directors such as qualification and experience shareholding. The performance criteria used to assess the effectiveness of the board as a whole and on individual director, and resignation of member during the year. Next is Remuneration Committee, Membership and Compensation of Remuneration Committee, Terms or Reference of Remuneration Committee, Function and Responsibility of Remuneration Committee, and Number of Remuneration Committee meetings held in the year. Islamic banks are encouraged to disclose information to the numbers of meetings attended by each member of the committee. Next is Risk Management Committee, Membership and Composition of Risk Management Committee, Terms and of Reference of Risk Management Committee, Function and Responsibility of Risk Management Committee, Number of Risk Management Committee meetings held in the year. Islamic banks are encouraged to disclose information on the number of meetings attended by each member of the committee, and lastly, a statement of the Islamic Bank Risk Management Framework. Then Audit Committee, Membership and Composition of Audit Committee, Terms or Reference of Audit Committee, Function and Responsibility of Audit Committee, and Number of Audit Committee meetings held in the year. Islamic banks are encouraged to disclose information on the number of meetings attended by each member of the committee. Last but not least, Sharia Committee. Key information and background of Sharia Committee's members, including the name, qualification, and experience. Terms or Reference of Sharia Committee, Roles and responsibility of Sharia Committee. Number of Sharia Committee meeting held in that year. Islamic banks are encouraged to disclose information on the number of meetings attended by each member of the committee and endorsement Sharia Committee on the conformity of the Islamic bank operation in accordance with Sharia principle business strategies. Principle 14. Board is collective, responsible and accountable for the veracity of disclosure and management of risk. The board is responsible for ensuring that an Islamic bank has system in place to monitor and adequately control the Islamic bank material risk and whether there is adequate and effective operational procedure, internal control and system in place for assessing, measuring, controlling, monitoring and reporting of risk. It is strongly encouraged that a brief statement of board's responsibility is provided in the annual report. Next, we continue to the background. The Islamic Financial Services Board (IFSB) is an international standard-setting organization that helps the Islamic financial services industry become more sound and stable by releasing global prudential standards and guiding principles for the banking, capital market, and insurance sectors. The IFI creates and publishes standards for international financial institutions in the areas of accounting, auditing and corporate governance as well as ethics and Sharia. IFI has been tasked with developing Sharia compliant accounting, auditing, governance and ethics standards in order to offer consumers with comparable, transparent and reliable accounting data. As a result, IFI's primary purpose is to prepare and develop accounting, auditing and financial management professionals. IFI must follow strict governance and ethical guidelines. Its function. The Islamic Financial Services Board (IFSB) was formed to oversee the creation of a worldwide consistent set of prudential, supervisory and disclosure requirements for the Islamic financial services industry. Over the previous decade, the IFSB has achieved tremendous progress in defining prudential norms, promoting liquidity, infrastructure development and raising knowledge of Islamic finance. This is a positive step forward for the Islamic financial services sector. With the globalization of Islamic finance, the IFSB will need to maintain the momentum of strengthening the industry while also building closer and more effective coordination with relevant stakeholders in the global financial system beyond this decade.
Objective of Accounting and Auditing Organization for Islamic Financial Institution for Islamic Bank and Taka operators. Number 1 is Islamic Sharia Rules and Principles is to advance accounting, auditing, governance and ethical thought in related to the activities of Islamic financial institution while taking into account worldwide standards and practices that are compliant with Islamic Sharia principles. Number 2, Islamic Sharia Rules and Principles to disseminate accounting, auditing, governance and ethical concepts relevant to the activities of Islamic financial institutions and their application through training seminar, periodic newsletter publication, report creation, research and other ways. And the last one is through the preparation and issuance of accounting standards and the interpretation of the same to the said institution. It should be harmonized the accounting policies and procedure adopted by Islamic financial institution.
The Audit Accounting and Auditing Organization for Islamic Financial Institutions AAIOV Sharia standards are adopted as mandatory regulatory requirements in many Muslim countries. It's followed by numerous Sharia Islamic finance, consultancy, educational, training institutions, non-banking in countries such as Kazakhstan. Legal basis of their national standard have been developed and have been recommended as guidelines in jurisdictions such as Kuwait.